Well, folks, get ready to get your flapjacks flipped. We are now in a greedy stock market. Yes, you heard me right. We're in a greed market now at this point in time. I was just going over a few different slides that are in the investor report, which is available for everybody in the private stock group, right? And one of these slides we put out is the CNN Fear and Greed Index, right? And as of right now, we are in greed territory for that index. Now, that index does not care about what the market's done over the last 6 months or 6 years or, 2 years or anything like that. It's really a short-term indicator that's really looking at the past month, if not the past few weeks and few trading days. And so it's really fascinating to see this I guess we can say indicator showing us that we're in a greedy market. And so I said to myself, are we really in a greedy market? And so I want to show you something very interesting in this video that's going to show anything but a greedy market except for a few stocks at the top that are basically giving this overall illusion of a greedy market happening right now. And I think this is very important because you got to understand what's going on with these certain stocks, why these ones are going up so much, and what this means for the overall market, and if we're really in a greedy market or not. Because I think a lot of people look at the market and they're like, is it really greedy? I don't know. I don't know if I would say that. Maybe more toward neutral. I don't know if I could say bearish, right? And so that's the main subject of today's video. We're going to talk about some stocks. We're actually going to talk about even the chef's going to be mentioned later on in today's video. We're going to talk about Oatly, this ain't no jokely, later on in this video. A couple stocks that we haven't talked about in a long, long time, right? And many other factors in the market. But this is the main core subject I want to talk about at the beginning here. Hope you guys enjoyed as always. Thanks for being here. Thanks for being subscribed, folks, okay? So if I just showed you that, right? And then I showed you this slide right here, S&P 500 top 10 stocks. And you saw this, right? Stocks like NVIDIA up 85%, Meta up 77%, Align Technology up 67%. If all you saw was that CNN Fear and Greed Index, and you saw this, I mean, if that was all I had to go off of, I would say, yeah, it looks like the market is greedy right now. I mean, the indicator is saying greed, looking at these moves it's saying greed. But when you dig a little deeper, you find very different things, and I mean very different things. The first thing I'd like to look at is what are the stocks that are usually the greedy stocks, right? The more FOMO-y type stocks, the exciting stocks, right, in the market. What have those ones been doing recently? Okay, well, look at Tesla Tesla. 1 month, that stock's down almost 15% in the past month. For a short-term indicator like the Fear and Greed Index, that doesn't feel so greedy right now with Tesla being down almost 15% in the past month. But what about the most, let's call it greedy stock of them all? Let me show you that one, okay? The most greedy of them all, here it is. It is NVIDIA. NVIDIA in the past month is up less than 1%. Less than 1 percentage point in the past month. So Tesla and NVIDIA, two of the most famous stocks in the market, two of the most greedy stocks in the market, are not doing anything. NVIDIA is basically flat and Tesla's down 15% in the past month. What about, oh my gosh, the C3 AI hype, okay? Everybody knows AI has been the hypiest thing in the past 6 months in the market, right? Specifically in 2023. And C3 AI was being a beast stock for a bit there. Well, look at the past month. This stock is down 32 percentage points in 1 month. I mean, geez, this baby keeps going. I mean, it'll be down 50% in a snap of fingers here. That's incredible move down, right? So we're clearly not seeing it in kind of the AI hype now at this point in time, right? That's interesting. Now, if we take a little step further, okay, I know a lot of people, don't have time to watch CNBC and whatnot, right? I have CNBC on all the time, especially Monday through Thursday, right? I'll be working, preparing videos, looking at earnings reports, all types of different stuff, right? And I'll just have it on in the background. Sometimes I'll put it on my computer or whatever, or I'll have it on my phone just beside me. And I'm just kind of listening to what people are talking about while I'm doing my work, right? And CNBC, sometimes they have CEOs going on and whatnot, but most of the time it's like fund managers, Wall Streeters, like your typical Wall Streeters, analysts. I can tell you this, okay? 80% plus of the people I've seen go on CNBC the last number of months are either neutral on the market or bearish on the market. I would say maybe, and this might be a high number, 20% are bullish on the market for the next 6 to 12 months. It's an overwhelming amount are neutral or bearish on this market. And so if I think about the overall sentiment in the market, it is not bullish. The sentiment from fund managers, from analysts, from Wall Streeters is not bullish right now whatsoever. If I think about retail, I mean, most retail left the market in 2022, right? I mean, they had, a little bit of fun there for a bit and then got devastated in 2022 and they all left. And so the only retail that's left is people like myself and you guys that are like in this for the next 10, 20, 30, 40 years, right? So retail left the market. They're not bullish. Then you got, obviously, fund managers and Wall Streeters that's overwhelmingly either neutral or bearish, ultimately. So they're not bullish. So where's this greed coming from? You could take it a step further. Look at the AI investor sentiment, right? We have a slide for this inside the investor report each week. And if you take a peek at this, 27% of investors roughly are bullish on the market the next 6 months. 27%. So that means roughly 73% of investors are either neutral or bearish on the stock market the next 6 months, right? Now, that's over 10 percentage points. That's over 1,000 basis points. Over 1,000 basis points less on the bullish side than we are traditionally at on a historical average, okay? So if you notice, like, the amount of people on neutral or bearish is much higher than the average, okay? So when you're looking at this, you're starting to view it and you're like, wait, are we really that greedy on this market when we have this and this and this going on, okay? Now, this is where things get really interesting, okay? And I mean really interesting. Because when we pull up a 1 month of the indexes, oh my gosh, the market actually does look greedy right now. The Dow Jones Industrial Average is up about 6%. The S&P 500 is up 5.2%. The Russell's up 5%. And the NASDAQ's only up 2.5% in the past 1 month. Those are phenomenal numbers. I mean, traditionally, if you get, a 7-8% return on a yearly basis from the S&P 500, that's about in line. We're up 5%, 5.2% on a 1 month for the S&P 500. That's incredible. So the indexes are performing, I would call it greedy-ish, and especially the Dow Jones Industrial Average in the past month. Now, not for the overall year, but for the past 1 month, the Dow has been getting awful frothy. But why is this? Well, we got to take it a step further, okay? I have a list of the Dow 30 stocks out there, okay? And what we're going to find here is overwhelming amount of, I would say, bullish activity in these Dow stocks that matter the most in the past 1 month. Not year to date, but in the past 1 month. Check this out. Goldman Sachs, one of the biggest weights for the Dow, up over 11%. McDonald's, 8.42% return in a 1 month for Mickey D's. Mick Overvalued is tearing it up right now. Home Depot, 6% gainer. Visa, almost 6% gainer. Amgen, almost a 5% gainer. United Health, 4%. Caterpillar, a little under 4% when it comes to that one. Now, when you see these stocks moving like this, you got to ask yourself, right? Are these sorts of stocks moving because we're going risk on, because we're ready for a greedy time in the market? Or are they moving up because folks are looking to hide out money? Because these are those sorts of stocks that people like to hide money in, okay? Goldman Sachs, McDonald's, Home Depot, Visa, Amgen, United Health. These are the sorts of stocks that a lot of people like to hide money in if they're unsure on where to put their money in the market, right? And if we look at one of the biggest weights in the fifth biggest weight in the Dow, right? That one hasn't done as well, but that's more of a NASDAQ-related stock there in Mr. Softy, right? And so think about it this way. If you want a guaranteed return, basically, right? You're looking for Treasuries. And Treasuries have skyrocketed to the moon in terms of what you could get, right? And so this looks at a 6-month Treasury over the past 5 years. And obviously, if you look at a 5-year, 10-year, 15 years, I mean, this is the best situation you've had to buy Treasuries in the longest time, literally, right? And think about this, right? These babies really started to skyrocket, obviously, throughout 2022 as the Fed raised rates more and more and more. And then really started to get to a lot of people's attention really in the fall time. That's when it really got on people's radars, right? Once we got especially up to about 4%, which was in October, beginning of October, that's when everybody started considering Treasuries. It was attracting more people, but this was almost like a blow off the top phase in terms of like everybody started talking about Treasuries. It was, everybody was talking about it. And so all of a sudden you had all this money piling into Treasuries during, all these months here, right? Well, some of those 6 months are coming up now, right? And so now people are saying, like, where do I put my money? Do I want it back in another 6-month Treasury here? Some people are doing that and saying, I'm going to ride another 6 months on my Treasury money. Some people are taking some of that money out, right? Some of the money that was generated in that yield and go ahead and putting that in the market, right? And some people are putting all that money in the market. It depends. Everybody's different, right? And so there was definitely some outflow of money out of the market throughout the summer and into the fall, which is something we obviously saw correlate in the indexes, right? And it goes into Treasuries. But now that money needs to go somewhere. It needs to go somewhere. You look at the 3-month, it's the same exact situation, right? So as these Treasuries continue to come due, the money, it has to go somewhere, right? And sometimes it's going to go right back into Treasuries. And the really fascinating thing is this. This is where things are going to get really intriguing. This is a 1 year. Okay, so this is people that tied up their money for a full year. Now, some people like to do that because they're like, it's a guaranteed amount for a full year versus a 6 month or 3 month. It's only guaranteed for that 3 month or 6 month. Some people like to play it on a yearly basis, right? So obviously, tons of money flooded into 1 year Treasuries throughout third quarter and fourth quarter. Well, guess what? That money is going to basically be available to folks come third quarter, fourth quarter. So the question is, where does that money go? Now, if for any reason we're in a situation in third quarter, fourth quarter where earnings are starting to strengthen, which I think is definitely a possibility. Let's imagine a scenario where unemployment's still, let's say in the high 3s or low 4s as far as unemployment goes. The economy is holding decent. Oh my gosh, do you know the move that will happen in the market at the end of this year and going into next year? There would be a parabolic type move because there's so much flipping flapjack and money over here. And if we go longer and longer without any major deterioration in the economy, really thinking about unemployment, the more and more people will start to give up on that in the back half of the year, right? And if you're talking about a strengthening earnings period, which I think is definitely going to happen for countless companies, I think in 3Q, I think even in 2Q, but 3Q, 4Q, I think you're going to see massive margin expansion, profitability expansion, and cash flow expansion on year-over-year basis for companies. I mean, you would talk about a significant move up in the market in that sort of scenario because all this money has to go somewhere. And if you're talking about the Fed starting to lower rates at that point in time, right? Let's say inflation continues to come down. Next thing you know, it's in the 3s. Come the third quarter, oh my gosh. Because then all of a sudden, you're not going to get crap for Treasuries. So that's when all of a sudden people start to look at, I'm going to get less on my Treasuries than I would have before. You know what, I'm going to move this money back in the market, especially if people are feeling more comfortable and confident in the state of the market and where the market's going at that time, okay? So that would be a pretty extraordinary situation, but that money's got to go somewhere. So when I look at the market overall here, okay, I see a market that is short-term greedy when it comes to the safety stocks, but really it doesn't feel greedy to me. It feels like I've got to put money somewhere and I want to put somewhere in the market, so I'm just going to pick some of the biggest Dow stocks. And some of those big Dow stocks are also the heavyweights in the NASDAQ, also heavyweights in the S&P 500 as well. So when that happens, man, it's just kind of like creates this like a bleed up for the whole market, and it creates a dynamic in the market that feels greedy. But ultimately, I wouldn't say we're in a greedy market right now. I would not say that whatsoever. And even a lot of these stocks that have come back, you look at a Tesla stock, right? Tesla stock's what, up 50% year to date? Pull up a 1 year of Tesla, pull up an 18-month of Tesla, pull up a 24-month chart of Tesla. And you get very different kind of feelings about if this is really greedy or not, okay? So that's kind of my thought process on a lot, okay? Next up here, Oatly, this ain't no jokely, has been showing a little strength recently. We're still down 34%, but that's not nearly as bad as it was at one point, I can tell you. So this one started to come back here. I own 18,000 shares in the public account here, right? And so this is an interesting situation because oats have continued as being in, a collapsing price range, right? And I think that's why a stock like this is showing actually some strength finally, is not because of the revenue story really right now, but because of at the end of the day, like what's most important when it comes to a company like Oatly, right? Oats. This oats prices are down 52%. This is going to matter in a significant way for Oatly's margins in 2023, along with some of the changes they made to their facilities and having other folks run their facilities and helping out with that. I mean, my gosh, the margin expansion for Oatly like this year is going to be astronomically high, right? There's two ingredients that make up the overwhelming amount of what is there in their product. It's water and oats. Water and oats, okay? Everything else is like this much. And so at the end of the day, for somebody like an Oatly, that matters significantly, but it's not just that. You look at something like this matters significantly as well. Refrigerated loaded truck down almost 64% when it comes to pricing year over year. If you look at spot rates for refrigerated, down 26% on a year over year basis. Fuel prices are down 17.5%. All this is going to, I can tell you, affect a company like Oatly in a massive way. And so when it comes to Oatly, expect margins to expand rapidly throughout this year. Quarter after quarter after quarter after quarter of massive margin expansion for this company overall. We'll see what happens, but I mean, when I look at oat prices down 52% year over year, and I look at, what's basically happening with trucking rates falling through the floor, I'm telling you, margins should be looking very, very good for a company like that. And when you think about something like that, right? Refrigerated, in terms of, refrigerated trucking dropping significantly, that's going to help even a company like Tattoo Chef, which Tattoo Chef's in a very different situation than Oatly. Tattoo Chef's fighting for its life. Oatly's not fighting for its life, okay? Tattoo Chef's fighting for its life, and so it needs anything to go right now, okay? And so I can tell you, with trucking rates dropping the way they are, that matters for a company like the Chef, right? And if you look at this even a step further, Chef, they've always imported a lot of their products from Europe into the United States, which means you have to ship overseas. Now, they got doubly screwed, right? Because not only do they have to have all their stuff refrigerated, right, and trucked around the United States of America, which got absolutely obliterated last year, but on top of that, and so if you're wondering why they ended up burning through so much money, right, this is why, okay? And on top of that, freight rates went to the moon, okay? And so when you're somebody like a Chef that's shipping so many of your raw ingredients overseas from Europe to the United States, it's devastating, absolutely devastating for your margins and your profitability and everything like that, okay? Your cash flow situation, it's all a nightmare, a pure nightmare. But obviously, we're in a much, much healthier situation. And the funny thing is, if you look at oats on a 5-year basis, oats are still up like 40-something% on a 5-year basis, I believe, okay? If you look at like freight rates, I mean, it's not like we're at some record low. I mean, we can still easily go lower when it comes to something like this. Never mind if you're thinking of kind of a recessionary scenario. So these are things to kind of factor in. I think that's why some of those stocks are showing some signs of life, right? Despite being in a tough place. Our Corsair Gaming fits that criteria as well, right? Corsair Gaming's up almost 29% year to date. Is the gaming market that strong right now? Is the streaming market that strong right now? I don't think so. But ultimately, for somebody like a Corsair, all their products are made over in Asia, and then they have to ship them over either to Europe or to the United States. And when you're talking about paying $10,000 plus for a container just to ship your product overseas, your margins are wrecked. Your profitability is wrecked. Your cash flows are wrecked, right? And we saw that just devastate Corsair. And so Corsair, regardless, the gaming doesn't have to even be strong this year. Gaming can still be in a weakened place. Streaming hardware can still be in a weakened place, and you'll see Corsair's margins, profitability, and cash flows improve quite substantially in the second quarter, third quarter, fourth quarter this year, regardless of kind of what happens in the gaming market. And that's a good spot to be in, because many times you're kind of counting on revenue growth in order to get kind of margin growth. And for a lot of these companies, it doesn't have to be that way. Oatly, Chef, Corsair, they can see margin improvements without seeing any major uptick in demand. And so that's kind of, I think, one of the reasons why some of those stocks are starting to show some strength there, okay? Now, last night, I put out a video on the channel going all into earnings this week. Obviously, two very important stocks for me reporting earnings, Meta and Amazon. I'm hoping both go lower. I obviously share my thoughts in regards to both those stocks in this video, as well as all the other stocks reporting earnings. Busy week here, folks. So if you didn't check out that, definitely check that out. And also, just so you're aware, when it comes to the Patreon, everybody that's going to be grandfathered in for the $10 tier, that will continue on. But ultimately, I'm going to take away this tier very soon here. So if you're looking to access and be able to see all the moves I'm making in the market for $10 a month, you're definitely going to want to check that out ASAP. That's the pinned comment down there, because I'm going to be getting rid of this tier, and then we'll only have this tier very shortly here. So I just want to let you guys know, just so if anybody's interested in that, you can get in before we take that away. So, and once again, anybody that's grandfathered in, you'll be grandfathered at that price there, okay? Appreciate it, everybody. Much love as always, and have a great day.